So today I want to teach you about market structure. This is our gold USD chart. This is our gold USD chart. So to know the market structure, let's start doing analysis in 1 day time frame. You come to settings, change candlesticks to line chart. Candlesticks to line charts. Now mark the recent feature the market has made. That one is a high. So recently the market gave us a high. That's a high. So where is the previous similar feature? That is where is the previous high. This one. So the recent high is above the previous high. And where is the at the previous high is this. So this was a sell and the market broke structure to buy to make this high right here. Let me change the color of this. Let me repeat this. Where is the recent feature the market made? Is this one. That's the high. Where is the previous high? Is this one. Let me change the color of this to something like this. I can use the blue one. Okay. Where is the last high for the previous high? Is this one. Let me change the color. You see the difference? So the market was a sell, then it broke structure E to make this recent high. So the market was a sell, it broke structure to a buy. So the market has to drop to confirm the break of structures for a buy continuation. So you use a Fibonacci, place your Fibonacci retracement tool at that point. So we're expecting the market is retracing in 1 day time frame to confirm a break of structures for buys. Let's go to 4 hours. Where is the recent feature the market gave us? What's the recent feature? Is this high. Where is the previous high? This is the previous high. In 4-hour time frame, the market is a buy because the recent high is above the previous high. You can check on the lows. This is a recent low. Why is the previous low? This one. This one is the previous low. So the most recent low is below the previous low. So that's a buy. Let's go to 1 hour. In 1 hour time frame, the most recent feature the market gave us is this one. That's a high. The previous high is this one. So the market still a buy since the market didn't take out this low. So the market still a active buy. So a 4 hour is a buy, a 1 hour is a buy market structure, and 1 day is a retracement for a buy. So what you basically do, you can do a Fibonacci for time frame like that. So the market is a buying for. So when you draw a Fibonacci, it's like you're waiting for some sort of a retracement for buy continuation. You come to you enter the market in 5-minute time frame or a 15-minute time frame. So now that's the market right now. Can you switch that to candlesticks? That's the market right now. So the market, you come to your entry point, you see what the market is making. You look at the candlestick formation. There is a buying pressure. See this candlestick right here, the rejections too. So I can plot my support and resistances. I can plot my support and resistances. And I plot support and resistances using 4-hour time frame and 1 hour only. So let me plot my support and resistances. You plot support and resistances closer to the market, and support and resistances are zones with 3 or more reversals and the same point. Zoom this out. One, like that. That one is a good support and resistance. A point with 3 or more reversals at the same point. You can zoom out. There is 1, 2, 3. 3 touches on the line at the same point. It's a good support and resistance. That one too. So good support and resistance. That one too. Let plot support and resistance is 1 hour time frame. one. Let's zoom it out for you. Zoom it. There is one second touch and the third touch. So be careful not to move the line, not to move the horizontal line while plotting the support and resistances. This that one. There is this one second touch and the third touch. So let me use that. Let me use that as my support and resistance. So the market hit a support at this point in 5 minutes. See the market reversed at support zone, and there is more buying pressure at that point since the market is it's a buy market in 4-hour time frame, lest it breaks structures. So we're waiting for other confluences to confirm that buy entry at that point. You can see the rejection, the candlesticks are rejecting like any more sales at that point. So the market is at support zone. That's a tick. A reversal for buy continuation in 4 hours time frame. There's a second confluence for buy entries at that point. Candlestick rejections, a buying pressure at that point. You can see at the price action at that point. So that's a good point to enter a buy. You see that like the market is pulling the candlesticks for a buy. So it's a good buy entry. I enter entries using a different device. So we use this for analysis. So basically that's how you do analysis. You enter the market at that point. You'll have to put your stop loss at this. So the market is having a buying pressure. So basically what you do on entering the market at that point, you put a stop loss at the previous low. When you buy, put the stop loss at the previous low. When you sell, put the stop loss at the previous high. So I'll be watching the market. That's how you do analysis. That's how I do my analysis. Based on market structure, support and resistances, Fibonacci. Let me see for this point. From that point I can plot a trend line. trend line. Fix the trend line. I can use this both. So you just connect the lows. That low, this low, and this one too. So that's our market. I'm afraid not to move this support here. So I might take a screenshot of it in case I move the support. It's better. Yes, that's better. That's better. That's better. So the market has touched trend line one time, the second touch, and the third touch here at the low. So you connect the lows for buy entries. So that's our market. That's our market. So a trend line that's a touch, that's a tick, a support zone, a tick at a Fibonacci retracement level of 61.8, that a tick, and it else week's rejections, that's a tick. So the market's worth entering the buys at the lows because there is a big buying pressure at that point. use good with a good risk management. Use a good risk management. A risk management is putting stop losses. So you use stop losses and move stop losses to break even. So you move stop losses to break even. The market is having more buying pressure. Take profits at the next zone. You take profits as zones. So basically that's how I do my analysis and everything. This is our market trading. That's how you catch trends. You do entries until you confirm everything is a tick, then enter the market. So that's how you catch entries in forex market. That's how I do entries. Use whichever methods which works best for you. At the end of the day, what matters is what you're making at the end of the day. That's all what matters. So if my strategy doesn't work for you, don't force it, because that's what works best for me. So that's our market right there. That's our market. You see the buying pressure, like for this candlestick was meant. I told you this market will spark buys. So it's you get in forex market, you just get to a point. It gets to a point where like you can just look at the market and you get entries. You can watch like price action and get forex entries. So but it takes more than just eyes. Like you have to do like analysis. You don't just look and enter. So you do analysis to confirm that the entries are valid at that point. So the method works. It works. It works for me. It should work for you. Get the right knowledge and do practice. Backtest like your methods. If it works, stick with that. And always do your own research. That's the best advice anyone can give you. So the market is cruising nicely. The market is cruising nicely, and yeah, you can ask anything. Ask any question in the comment section. I'll be right here to address it. So don't be scared to ask your questions. Subscribe and turn on post notifications. We don't do back tests. Yeah, we do analysis on a live market. Our market is moving buys nicely. It's a nice buy. It's a nice buy. Was a nice entry. Perfect timing. So yes, you can always use my analysis. Subscribe. Subscribe, guys. The market is moving nicely. So as the market moves, move stop losses to break even. You move stop losses to break even. Always. take trades, take trades in these zones. Always. Don't enter trades in the middle of nowhere. Take trades in the zones. Always trade to the direction of the trend. Wait for confirmations. It's called risk management. And everything will be okay. Trading is it's a hard field, it's a broad field, so you need to have everything. There is no room for errors. You don't do errors in trading. You do errors, you in for it. You are done, you in for it. You deal with real money, so you avoid errors at all costs. Market is having a more and more buying pressure, pushing markets to the buy side. What a good analysis. So guys, with a good analysis, good entries, you'll always make something out of the market and apply risk management at all costs. Thank you. Then the buy continues. That's how the market works. I mean, so a good entry, good analysis. That's how that's how you exactly do it. So always catch good trends at a support or resistance zone. Do nice entry, watch the market structure, and use proper risk management.